The FDIC liquidation notice appeared on a cedar post at the corner of Section 14, Shelby County, Iowa. 280 acres of prime, dark topsoil that had passed into federal receivership after the local savings bank collapsed, now scheduled for public auction on a cold Tuesday in October of 1991. And Harold Crenshaw stood in front of that sign in the same mud-caked work boots he had worn climbing in and out of his tractor every morning for 9 planting seasons, reading the bid terms once, then a second time, then a third. The land wrapped around his own fields on 3 sides. And the loan officer who had laughed at his equipment request 9 years earlier was no longer sitting behind any bank desk. Now, what Crenshaw was reading about was land that Shelby County Savings Bank had accumulated through foreclosure proceedings between 1985 and 1988. Ground stripped away from neighboring farm families who had borrowed at peak valuations when Iowa soil was trading at over $2,000 an acre, and then watched those values collapse by 60% inside of 5 years as interest rates climbed and export markets dried up. The bank had been required to carry these parcels as collateral assets on its balance sheet, at appraisal figures that bore increasingly little relationship to what the land could actually fetch, and the accumulated losses had broken the institution entirely by early 1989. Now the FDIC was doing what it always did with the wreckage, selling it off parcel by parcel to whoever showed up prepared to bid. None of it. Not the land, not the position, yet not the quiet moment at that cedar post, would have been possible without a single piece of machinery, a used John Deere 4440. Harold Crenshaw had purchased in the spring of 1982 with money he'd borrowed from the Farmers Home Administration after the man at the savings bank turned him away. Yet that tractor had run through an estimated 14,000 operating hours across 9 consecutive Iowa harvests without a single season-ending mechanical failure. What Harold had built with those hours and that machine, 1 careful acre at a time, across a decade that broke most of the farms around him, is what brought him to that auction. Yes, if you want to see how a single used tractor and a loan application that almost died on a banker's desk changed the course of one Iowa farm, and how 9 years of disciplined machine work ultimately allowed a farmer to buy the land that institution once controlled, here is what I ask. See that subscribe button below this video. Now it is the exchange. Your way of telling us this story found you. Hit subscribe if it moved something, leave a like if the machine work resonates, and tell us in the comments whether you have ever seen a John Deere 444 working ground or sitting in a barn in your county. Back to Harold Crenshaw. Yes, and to the spring of 1982 when everything started. To understand what Harold Crenshaw was standing for at that October auction, you have to go back to the spring of 1982 when he was 28 years old and had just inherited 80 acres of under-farmed ground near Harlan, Iowa, from his father's estate. Yeah, the soil was genuine. Deep Monona silt loam, the layered dark topsoil that Iowa's western counties are built on, capable of producing strong corn and soybean yields when worked correctly. But the farm had been undercultivated for several years, and the only powered equipment on the property was a 1964 Farmall 400 that burned oil steadily and slipped out of gear on soft ground. Harold needed a working tractor. He needed it before the planting window closed, and he needed financing to acquire one. He walked into the Shelby County Savings Bank on a Wednesday morning in April of 1982. Wearing a clean shirt and carrying a handwritten summary of the property's soil classification and projected yield improvement, and asked the agricultural loan officer, a man named Gerald Prost, who had managed farm credit at that branch for 11 years, for $18,500 to purchase a used 1979 John Deere 4440 from an equipment dealer in Harlan. Prost looked at the loan request for less than a minute, looked at the acreage figure, and told Harold in a measured and practiced tone that 80 acres did not constitute a sufficient collateral base to justify that figure on a piece of machinery at current interest rate levels. He used the phrase small hobby operation. He used it twice. Yes, the tractor Harold wanted was a 2-wheel drive 1979 model with an enclosed sound guard cab sitting on a used equipment lot in Harlan with just under 4,000 hours showing on the meter, a machine powered by John Deere's then-new 466 cubic inch, six-cylinder turbocharged diesel engine, producing 130 horsepower at the power takeoff shaft and approximately 112 at the drawbar, equipped with the 16-speed quad-range transmission that Deere had introduced alongside the 4440 to replace the old synchro range. At $18,500 for a 3-year-old machine with a clean service record, Harold was not shopping frivolously. He was identifying the correct implement for an operation he intended to expand, and the soil data he had brought into the bank supported that intention clearly. Prost had not looked at the soil data. Harold left the savings bank that Wednesday without a loan, without an apology, and without any outward sign that the conversation had affected his plans, and drove directly to the local Farmers Home Administration office on the edge of Harlan's business district. The FMHA operated under the United States Department of Agriculture as what its own field officers commonly described as the lender of last resort for farmers unable to secure conventional credit. And Harold's application, his first, was reviewed the following morning by a county field officer who spent 40 minutes examining the soil profiles, the projected yield calculations, and Harold's documented farming background before approving a direct operating loan of $16,000 at a subsidized interest rate. Harold called the equipment dealer before he cleared the parking lot. He took delivery of the John Deere 4440 on a Friday afternoon in late April of 1982, drove it home along the county road with the evening light pale and flat across the Iowa bottomland, and parked it in the same sheet metal equipment shed his father had built in 1958 to house a tractor that had long since been outclassed. The machine showed some sun fading on the hood and carried a minor hydraulic weep at the left rear axle housing that the previous owner had flagged, and Harold had already scheduled to reseal. But the 466 cubic inch turbo diesel started cleanly, ran without blue smoke, and moved through all 16 forward speeds of the quad-range transmission without hesitation or complaint. Harold was back in that cab on Monday morning at 5:45. And he did not stop working the ground for the next 3 months. That first planting season established the machine's capability on Harold's ground without ambiguity. The 4440 pulled a 4-row planter through heavy Monona silt loam without lugging on the headland passes, ran a field cultivator through standing corn stubble that would have stalled the Farmall 400 completely, and compressed what should have been a 15-day preparation window into 11 working days, leaving Harold time to address 2 failed drainage tile lines that had been suppressing his yields for years. His corn yield on the home 40 came in at 147 bushels per acre against a Shelby County average of approximately 129 that year. Harold documented every operating hour the 4440 had logged alongside every per-acre yield figure the farm produced. He was constructing a record. And over the next 2 seasons, Harold rented an additional 160 acres from 2 neighboring estates at lease rates already softened by the early financial pressure settling across the county, and expanding his total operation to 240 acres and placing the 4440 on workloads it had been designed to manage comfortably in flat-ground corn country. He added a 6-row corn head to his combine setup and used the 4440 for grain cart service during harvest, pushing the machine's cumulative hours past 8,000 by the end of 1984 without a single dealer-level mechanical intervention required. Dealer service records were becoming one of Harold's quiet methods of proof. A tractor with a clean 8,000-hour history was a document, and documents were what he was building toward. By 1985, the full consequence of the farm crisis had arrived in Shelby County with a force that made the earlier financial pressure seem like a warning. Iowa farmland had lost 60% of its value from its 1981 peak of $2,147 per acre. Interest rates on farm loans had climbed to 21.5% at their peak, and foreclosure notices were appearing on county road posts with a regularity that had ceased to shock anyone at the grain elevator or the co-op. 4 of Harold's neighboring operations were in active delinquency proceedings before the year was out, and the Shelby County Savings Bank was accumulating foreclosed parcels that bordered Harold's rented ground on the east and north. Harold kept his head down, maintained the 4440 on schedule, and paid his FMHA installments 9 months ahead of maturity. The financial contraction around him created work that Harold had not anticipated. As neighboring operations deferred maintenance, sold equipment at distress prices, or simply ceased functioning, and several farmers began contracting Harold to perform custom tillage, planting, and harvest-related field work on their remaining ground using his 4440, by 1985, one of the better-maintained high-horsepower tractors operating in the south half of the county. Yet he charged $14 an acre for primary tillage and $18 for planting operations, competitive rates that came with the accountability of a neighbor who knew the drainage patterns, the wet corners, and the tile line layouts on every field he touched. The custom work income funded 2 new implement sets and eliminated Harold's remaining FMHA tractor debt 22 months ahead of schedule. Between 1985 and 1988, the Shelby County Savings Bank executed foreclosure proceedings on 11 separate farm parcels across the county. Accumulating just over 280 acres of collateral real estate, it was required to carry on its books at appraised values that had lost all realistic relationship to what Iowa ground was actually moving for during those years. Gerald Prost processed several of those foreclosure files personally. Farmland originally lent against at values near $1,900 per acre, and now being internally appraised at $620 for capital adequacy reporting purposes. The bank was holding agricultural land it had no mechanism to farm, at valuations it could not defend to regulators, and its quarterly capital ratio filings had begun to document the structural consequences of that position. Harold watched the bank's accumulating land position with the attention of someone who understood that institutional failure in a small county was not an abstract event. It had a parcel map, a legal description, and an eventual disposition process that was a matter of public record. He continued working his expanded acreage through 1986 and 1987. He kept the 4440 in regular preventive maintenance at the John Deere dealership in Harlan, and in the spring of 1986 purchased a used John Deere 2440 utility tractor to handle loader work and lighter tillage duties, specifically to preserve the 4440's operating hours for primary field production, where its 130 horsepower were genuinely needed. Yet nothing Harold bought or planned during those years reflected speculation. Every decision was designed to outlast a crisis he could see arriving for everyone around him. As by 1987, the Shelby County Savings Bank's financial condition had crossed the threshold where internal remediation was no longer a viable option. The land it held on its books had depreciated past the point where normal earnings could rebuild its regulatory capital reserve. And the Iowa Division of Banking had opened a formal supervisory examination of the institution that would run for most of the following 18 months. Harold learned of the examination the same way he learned about most things in Shelby County, at the grain elevator and through the county extension newsletter, and he began a methodical study of the FDIC's published procedures for the liquidation of real estate assets from failed financial institutions. Yet he read those procedural documents the same way he had read the 4440's operator manual in 1982, once for comprehension, once for detail, and once to find what most people missed. The Shelby County Savings Bank was closed by the Iowa Division of Banking on a Thursday afternoon in February of 1989, with the FDIC appointed as receiver and the institution's assets, its deposit accounts, its loan portfolio, and its accumulated 11-parcel land inventory transferred to federal management for systematic liquidation. Gerald Prost was not present for the closing. Yet he had submitted his resignation from the loan officer position 6 months earlier and was managing an agricultural supply territory out of Omaha, Nebraska, by the time the state banking commissioner's representatives arrived at the branch on 1st Street. The 11 parcels of Iowa farmland the bank had accumulated through foreclosure were now federal inventory, and the FDIC would spend the next 2 years conducting title searches, environmental assessments, and comparable sales analysis before any of it reached a public auction floor. Harold filed a formal expression of interest with the FDIC regional office in Kansas City in the spring of 1990, identifying Section 14, the largest single parcel in the failed bank's land inventory, 280 acres of tillable ground, sharing 3 boundary lines with his own home farm, as his primary acquisition target, and requesting formal notification of the eventual public sale. Yet he spent the following 18 months continuing to farm his existing acreage, documenting his yield history, maintaining the 4440 and the 2440 in serviceable condition, and working with a USDA Farm Service Agency loan specialist in Atlantic, Iowa to structure a financing package that would allow him to bid competitively at auction without placing his existing operation at risk. The 4440 went through every one of those additional harvests on its original engine block. Its hour meter was approaching 14,000. The FDIC auction for Section 14 was conducted on the morning of October 8, 1991, at the Shelby County Fairgrounds in Harlan, with 7 registered bidders and an opening price set by the agency at $720 per acre for the 280-acre parcel, a figure calibrated to the slow land value recovery beginning to show in western Iowa after the decade's floor. Harold was the last bidder standing after 3 competitive rounds, closing the purchase at $847 per acre for a total acquisition cost of $237,160, financed through a combination of his USDA Farm Service Agency structured loan and the equity he had accumulated in the home farm over 9 seasons. He drove back to the equipment shed that afternoon, parked the truck, walked inside, and started the John Deere 4440 one more time, not to work the ground, but simply to hear it run. While what Harold Crenshaw built over 9 Iowa seasons was not exceptional by the measure of final acreage alone, 360 combined acres is a mid-scale operation by any current standard, but the discipline behind it, the specific machine that made the work possible, and the unbroken line from a bank officer's dismissal in 1982 to an FDIC auction floor in 1991 is exactly the kind of tractor history that disappears quietly when the last people who lived it stop speaking. A used John Deere 4440 with 14,000 hours and a clean service record is not a footnote. It is the reason. If this story moved you, please take a moment to like this video and subscribe to Tractor Junkie USA. Your support is what keeps us finding, researching, and telling stories like this one. Tell us in the comments where you're watching from, and whether a machine like the 4440 has ever worked your ground or your family's ground.